Hey, it's Michael Saul, but everybody calls me Tiny, and this video is ready to go, plus the great French fry shortage and how to play it. This is stock market analysis for the week of May 7th, 2018. If you would like intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, then follow the instructions on how to confirm your email, and you'll receive intra-week updates from me. Also, if you would like to interact during the day, we have a free Facebook group. Go to www.facebook.com/groups/attackthemarkets. You must answer 3 questions, but I promise you don't have to study for them or anything. They're real easy. And then you will gain entrance into the Facebook group when we talk about what's going on intraday in the market. So let's take a look at what happened last week. The S&P 500 broke below the 200-day moving average again on Thursday, but it couldn't stick, and instead it turned tail and formed a hammer. Friday, the gap down was the trade of the week by far. It offered a wonderful opportunity, and also you could see it nibbled through the 200-day, but quickly remounted it and just zoomed up. Did sell back a little bit, but to leave a tail, but not much. And you can see here I drew these white lines in because what I'm doing now is I'm drawing the triangle inside the bigger triangle, which are the blue lines. Now the good news is everybody is now looking at this as a triangle, as well they should. And I don't know if that's good or bad, like if everybody's waiting for it to break. Does it ever break? I'm still leaning to the long side. I still have about a 65%, in my opinion now, chance that it's going to break to the long side. But again, until it breaks, you're really flipping a coin, right? Volatility always trumps direction. So the fact that volatility is narrowing down here, is coming down to a break point, that has to be the first focus. We have to wait to see which way it goes and then go with it, or more appropriately, wait for it to go, see the test back, and then if that test back holds, that is the best entry, right? Once it breaks, holds, and then says, okay, the break is real, whichever way that is. Now, again, if we break out of the triangle, I believe we're going to new all-time highs, going up to a fifth wave high. If not, and we roll over from here, even though we had a great reversal Thursday, great day Friday, doesn't mean we're out of the woods here. We're still in the triangle. So if it breaks from here, takes out the April, right? That's an April, yeah. It takes out the April, like, forget if it's late March or April. Very good. If it takes out the April low, I think it's taking out the February low and going to the zone that I've had marked off for weeks. But right now, it looks like we are going to break higher. This is a fourth wave triangle that has alternated. This could be, the last point comes up. Not going to say it's going to get there in one fell swoop, but it may decide to break out. Now, there's a couple of things going against the seasonality here, which is we're in the worst 6-month period of the year, and we're in one of the worst months of the mid-year election year, historically. Now, again, I don't use seasonalities to time the market. I use them as a background indicator. I mean, it's part of the timing, I guess, but it's not something that I look at and go, oh, no, this is the only, this is the only thing to use. You got to use the chart patterns, too, in my opinion, so. But for now, we're in the triangle still. There's still opportunity. There are still things shaping up. There's sanctions that may be reinstated on Iran, and that is moving oil. I'm going to be talking about that during the week in the intra-week updates. So if you didn't run and sign up when I first said it earlier, maybe a good time now to pause the video, go to attackthemarkets.com and sign up. I'll be talking about some individual stocks and some nice setups there. All right, so that's the S&P. Here's the Dow. Also did the same thing at the 200-day moving average. NASDAQ. Okay, so the NASDAQ, if you're going to count this as the triangle, which you can, is starting to come out of its triangle, so that's good. I just have a little problem with it, this little tight coil here, but I mean, it's above the 50-day, it's starting to move. Yeah, I mean, it's hard to say that the NASDAQ isn't breaking out here. So we want to watch NASDAQ. NASDAQ also had a nice week. It was up on the week. The Russell, yeah, the Russell looks okay as well. Mid caps, yeah, they're lagging a little bit, but they held the 200-day moving average. Semiconductors still could be better. Had a nice day Friday, of course, right, with the rest of the market. This is a beautiful day, but I like the way it held the 200-day moving average, so that could be a nice sign of higher prices to come. Here's Clad Tanker with a really nice pushback over the 200-day moving average, and that's important. Here's NVIDIA, nice move here. See if that could attack the highs once again. How about a stock like ADI? Also held the 200-day with the nice bounce. What about Intel? Held the 50-day moving average, also acting well. Banks. Okay, so the banks did move lower, but hammered at the 200-day and got the bounce. Okay, you got Bank of America, more of an inside day. Now, it didn't confirm the hammer, but Bank of America did break down, held the 200-day moving average for the time being. JP Morgan, Citigroup, how about Bank of New York? We haven't looked at that. A little sloppy. Northern Trust, yeah, nothing really. Zion, yeah, showing some good relative strength there. How about the broker-dealer? Okay, so the broker-dealer came out of its coil/triangle to the downside here. Here's Goldman. So Goldman sold off into the gap fill. I posted this in the Facebook group before it did this. That was the target. It did hit the gap, and it reversed pretty nicely here. And it did get the confirmation. Yeah, it did. It sold off from the high on Friday, but it still closed above the highs from Thursday. That's Goldman. You look at Morgan. How about the biotechs? So the biotechs look like they are, I'll move these lines, look like they're setting up a triangle as well. So let's see what they can do here. There we go. So there's the biotechs. You can look at Biogen trying to get off its butt, and there's Gilead. Yeah, getting smacked a little bit here. How about the glamour stocks? Excuse me, glamour stocks. Amazon consolidating up here, looking okay. Alphabet, yeah, really came down out of this pattern, then coiled up again, and then got sloppy here. So I like the way it went back over the 200-day moving average, but now we have to see if it can get some follow-through. The Apple, yeah, it's just a monster. You know, the name in tech still. I mean, just crazy. All those, iPhones, and then all of a sudden they came out and said, hey, it's great. They don't give wearable numbers. I have no idea. I don't know why they don't, but I read that Cook said it's the equivalent of a Fortune 300 company. So that means it's at least $9.3 billion in wearable stuff, right? The pods, the ear pods, whatever they're called, and the Beats, and the watch and all that stuff. All right. So there's Apple. What about Netflix? And Netflix acting really, really well. Tesla, if you didn't see Musk's, what he said, the earnings call, whatever it was, just YouTube it. A little crazy, but a nice little recovery on Friday. How about the Facebook? Yeah, so the Facebook is above the 200-day moving average here, and it's trying to consolidate. It's definitely something to watch here. Definitely something to watch here with Facebook. See if it can break out from here and try to reattack the highs. What about bonds? Yeah, so bonds, who broke their 78.6, suggests that it's going to new lows, at least new 18 lows and probably 17 probably 17 lows as well. Is consolidating here. So again, volatility trumps direction. Always, always, always. So what you want to do here is draw the lines and see which way bonds are going to break. Gold down to the 200-day, but did hold. So gold has lost its luster, lost its shine. Gold miners, bounced off the 50-day moving average, but got to get above 24. That's what my friend Mike Swanson said. In oil, coming Iran sanctions, possibly. USO breaking, was in a bull flag. Crude, so a lot of targets, $80 crude, $110 crude, whatever it is. Read an article over the weekend that said $110, can add $5 to $10 a barrel if the sanctions come in. I think it's going to be more than that because I think it's going to get overblown. How about Caterpillar? Held the 200-day on the test. John Deere below the 200-day and didn't remount it. Right? Did have the hammer. Had a couple hammers last week, but kind of a lame Friday. It intraday broke above Thursday's hammer high, but didn't close above it. All right, so again, we're in a triangle. I'm expecting us from here to have the fourth wave triangle complete, and we start to move out to a fifth wave high. However, it is still early. We have not broken the triangle just because we poked above these white lines. I'm looking at the blue lines here. Gotta watch the blue lines. Although the NASDAQ looks like it's leading, that would be a good sign. But NASDAQ got to get cooking as well. All right, 2 stocks to watch this week. The first one is a low price stock known as Social Reality Inc. Class A. It is a advertising agency stock. It doesn't trade a lot of volume. Okay, I do not own this. Have to be real careful with disclosing these when we have these real low volume stocks, but it is a nice pattern here, and if it were to get going, it could challenge these highs up here just shy of $8. So of course, one step at a time, but it is in a nice looking pattern. Now, the second part, which is the second part of the title of the video, which is the Great French Fry Shortage. So I read an article this weekend in Barron's, talking with Lawrence Kemp, is the name. It's called Paying Up for Growth, Portfolio Manager, BlackRock Mid-Cap Growth Equity. So he talks about a stock, and I'm going to read the paragraph. Much of the fund's success, Kemp says, comes down to finding durable growth stocks in every sector, even the sleepy ones. In consumer staples, where growth is scarce, he likes Lamb Western Holdings. Spun off from Conagra, Lamb is the king of frozen French fries in the U.S. and the second largest producer in the world. Wow. Frozen fries are in short supply, Kemp says, excuse me, while global demand is rising. I haven't had a French fry in almost 8 months because I'm on the ketogenic diet, or is it ketogenic diet? I don't care how you pronounce it. I'm always pronouncing something wrong anyway. I haven't had French fries, and that's why I'm probably drooling all over my Barron's because of reading this. But anyway, Kemp says our global demand is rising. Lamb is expanding production capacity, and Kemp expects margins to improve, and the company takes advantage of the fry shortage to increase prices. The food industry faces huge price deflation, but Lamb has good pricing power, he says. Okay, I'm not making fun of Mr. Kemp, okay? I'm just found it very interesting that there is a French fry shortage, okay? And look at this stock. I mean, wow, it was spun off. And and it's in it's packaged foods. It's in the consumer defensive sector. And look at what it's done since getting spun off in late 2016. I mean, a total absolute monster. It looks like a freaking tech stock. All right. Now, I did not know there could be a frozen French fry shortage. I didn't know that. I thought that potatoes, well, they don't grow on trees, but don't they grow on the ground? And yeah, I know the potato famine, blah, blah. I get it. But last I checked, Idaho was still banging them out. Right? So this isn't Ireland back in the day where they had the potato famine, right? I don't know. I mean, don't you just get the potatoes and cut them up and freeze them? I don't know. I don't know why. I don't know enough about this to make to joke much about it. Although I am kind of shocked that there is something such as a frozen French fry shortage. I really am. I am kind of amazed at this. Anyway, and I think potatoes can grow in a lot of different I just never heard of a potato shortage. I go to the supermarket and they're stacked up 1,000,000 miles high in the produce section, and then you go and there's 16 different kinds of frozen fries to buy, and the waffle fries are my favorite. I'm getting so hungry, but I can't eat it. But I used to love going to Chick-fil-A, and I'm like an anti-chicken guy. I hate chicken. So I used to go to Chick-fil-A and get the waffle fries and the hot sauce. I remember my oldest would not stop crying. He was, I don't know, under a year old. So I said, all right, I'm going to take him for a ride. I put him in the minivan, and I went to Chick-fil-A and got the waffle fries. By the time I got to Chick-fil-A, he was out like a light. I got the waffle fries. I said, I better get 2. I got 2 orders of fries. Came home, and he slept through the night. But I only did it once. Anyway, I don't know why I'm telling you that story, but this is the stock to play, apparently, if you want to take advantage of a worldwide frozen French fry shortage. Questions? Tiny at attackthemarkets.com. Go to attackthemarkets.com if you haven't already. Sign up for the intra-week updates. I got some oil stocks I want to talk about this week. Go to the Facebook group at facebook.com/groups/attackthemarkets. Give me a thumbs up so I move up the rankings here in YouTube. I really appreciate you taking the time to watch this video, and I will talk to you soon. Have a great week trading.